Welcome to the Trading Bell Show. My name is Maina Shege and thank you so much for your company. Today we are right here at the Nairobi Securities Exchange speaking to the Chief Executive Officer, and I'm here to understand what does the market hold, especially this year, coming from a year that was quite unprecedented. We're hoping to get these insights and probably what you can do yourself to ensure that you get yourself into the investment cycle right after his profile.
Geoffrey Odundo is the Chief Executive of the Nairobi Securities Exchange PLC. Mr. Odundo, an accomplished investment banker, has been in the financial services sector for the last 26 years, 20 of which have been in the capital markets in various senior roles in asset management, corporate finance and securities trading. He is currently a director of the Central Depository and Settlement Corporation Limited, director of the NSE Clear Limited and a trustee of the NSE Fidelity Funds. He is a member of the Central Bank and Consolidative Forum for Domestic Debt Market and a council member of the Institute of Certified Investment Financial Analysts. Mr. Odundo is also a director of the Association of the Stock Exchanges of Africa and is a member of the Thomson Reuters Africa Customer Advisory Network. He holds a master's degree in strategic management and an undergraduate degree in mathematics and economics. He is also an advanced management program graduate from Strathmore Business School.
Karibu sana, Jeff.
Thank you very much.
It's good to see you, and first may I start by congratulating you. I saw that there was a full year extension of your term. That must be good news.
I think it's very, very good news.
Yes.
I feel very privileged to have been given the opportunity to serve one more year.
Yeah.
I think we're right at a very defining time at the NSC,
Yes.
where we've done a lot of work in terms of building products, markets and infrastructure.
Yeah.
And we're now ready to actualize some of the benefits. And I want to be there to help see some of this through.
Come into fruition. Yes.
Yeah, so I'm very excited, and I think it also gives us time to close out some of the key projects and our strategic plan.
Yeah.
We had infrastructure improvements, which we made very good progress on, digitization, product uptake. And I think it's I feel very well, I feel very privileged, let me just say that. So that even if once we complete this process, the next leadership will be able to build on that momentum. And for me, I think the 1 year will be a very gracious one to work on.
Great, and we can't wait to see what is being unfolded.
Thank you.
Well, last year was quite a bit of, if I may call it, flat because of how the challenges were, not only just here in Kenya, but globally. We saw the markets really not performing as expected. And now this is sort of, we're still in the first quarter of the new year. Are we expecting to see something different, putting in mind that this is still quite a challenging year, especially economically?
Yes, I think it's going to be a very defining year for us, as I started saying. So this is 2023.
Yeah.
It's 1 year away from the end of our strategic plan, 2020-2024.
Okay.
So we keep tracking that and seeing where we are in terms of our deliverables.
Yeah.
And I think when we did our midterm, we realized that we've done most of the things. We've done infrastructure improvements, product development, and building the profile and brand of the NSC. The missing link is the market size.
Yeah.
The market size hasn't grown much.
Okay.
It hasn't grown because no new companies have come in of good sizes. The level of liquidity is not as high because stocks are concentrated on about 5 or 6 counters.
Yeah.
And so market is sort of skewed at the moment. And so working to bring in more listings is where we want to put a lot of effort on.
Okay.
We got commitment from the national government to do 5 listings.
Yeah.
We equally said we're going to do 5
But I wanted
listings.
to ask you, how are we looking forward to this?
Very much. I must say that we want to play our role as private sector to really actualize some of the plans we had around listings.
Yeah.
We're starting off with the listing of an IREIT in a couple of weeks.
Wow.
Where a substantial IREIT, almost 6.7 billion.
Wow.
And a number of other IREITs will follow.
So in a few weeks, we're ringing the bell.
They're ringing the bell.
Okay.
They're ringing the bell. The bell ringing is starting. And also a number of private sector companies who had intimated had shown interest,
Yeah.
but now feel more encouraged because they can see an alignment between us and government.
Okay.
And so I'm very confident that this year we're going to see quite some listings, this year and into next year.
Yeah.
Because the listing process is not a quick turnaround. It takes a bit 3-4 months to finish a process. But that's the exciting part. And of course, government coming in and giving us some companies will also give us a good contribution.
Okay.
So let me just say that we began. I know the markets are fragile, given the global factors, the economic factors locally.
Yeah.
And so we have to keep our eyes on that, but it doesn't stop us from still continuing to serve the value proposition for the market.
You've spoken quite well in terms of some of the factors affecting the market and really what you plan to see and hope to see, especially after the president's visit here. But now looking through the entire year of 2023, which is now your year, if I may call it that, there's still some factors really that are driving the market, whether to perform or not and the likes. Some people have alluded to capital flight last year by some of the foreign investors. Are they coming back? What are you seeing and what is your expectation this year?
So we are alive to the fact that the foreign investors are still very cautious of trading here.
Okay.
And there are many reasons. For instance, interest rates in the developed markets have been rising because of inflation. Yeah. And that then gives a reallocation, a higher reallocation to those markets. Okay. But I must say that we have to think about how do we counter this. And our focus right now is to build our local demand. Okay. So we have local institution demand and we have got local retail demand. Yeah. We're very low local retail demand. So we want to work on a retail strategy that encourages Kenyans to save through the market. Okay. Again, aligning with government. Yes. Who wants to encourage Kenyans to save?
Going down there.
But we're not going to just talk about shares. We're talking about the value proposition in the shares. We want to show, want Kenyans to understand what an undervaluation means. Okay. So today, when you hear the market is undervalued, you know, you got to know that this is a buying side. This is a good buying point, and why. We want to make account opening easier. Yeah. We want to make trading more easy, very easy on the hand. Yeah. Access to the market right on your hand. Wow. So and getting alerts that tell you, oh, the share you bought yesterday has hit 2% up. Do you want to sell? You know, things to just build, you know, some value proposition.
So is that wish of the president when he came here and he said he one day wishes to see a border rider trading come into fruition?
Yes, that is there. That we're building on that wish. Wow, we're actually actualizing that wish, and you're going to see that. And really, if you look at it, and we borrowed this from our study of the Indian market, where last year, despite what you call capital flight from international investors, the markets grew. They grew because of retail. Yeah. So why not in Kenya? We are a very, I would say, a capital-centric society. Yes. We like money. Okay. So we just need to encourage them to know how to make it well, isn't it? Yeah.
All right. I'll be coming to talk to you about the cross-listing aspect of it because I know you're part and parcel of the linkage. But first, I saw and have been checking out on your platforms on social media and all that you were quite keen, and I saw a lot of all the persons who registered for Ibuka, the businesses there, the SMEs. I saw you having forums with them. Are we expecting something? Are there something cropping up out of them?
Yeah. Yeah. So we are very focused. Ibuka came in 2017, and our whole interest about Ibuka was to encourage SMEs to tap into capital market financing. Yeah. But before they did that, we had to create a learning curve for them. They must go through academy to build a knowledge and understanding of capital markets. Okay. We are happy that we have the first graduate, which is Homeboys, and who came in 2020. Yes. And are imminently starting to trade on the market. Okay. So building on that success, a number of our Ibukis now have seen reality. Yeah, they've seen Homeboys grow and now be able to attract investors. So they're seeing there's an actual value proposition of coming to the market. We recently held a very good seminar here where we had a panel with the Homeboys CEO, and he was able to speak about the value he has seen since he started the journey under the Ibuka program. Now that testimony is resonating with all aspirational companies. Yeah. All of them who came here have a dream to ring the bell at the exchange. Wow. but they needed to feel it. And I think Homeboys has provided the good start to that. So we want to be able to complement the debt capital that companies borrow by encouraging them to take equity capital.
Wow.
And so we're going to be doing a lot of that sensitization and get our Ibuka companies to migrate even from Ibuka into our unquoted market segment, where they can actually start interacting with investors, and eventually into the listed market segment.